See, everybody is really interested in finding a multi-bagger stock. So they do all kinds of analysis and finding which stock can give them 10x returns, 20x returns down the line. But finding a multi-bagger stock is all about finding that growth potential, how fast it can grow and how big it can grow. So in this video, I'm going to talk about how do you identify these multi-bagger stocks in 3 simple steps. So before I explain the concepts and the steps to find the multi-bagger stock, you need to understand one important factor called TAM, total addressable market. So recently I read a newsletter from Grow where it was very interesting, which conveyed why focusing on TAM is really important in order to identify a multi-bagger stock. So let me explain what I've read in this newsletter so that you can easily understand the overall concept. So LeBron, who is a famous NBA player, was offered $100 million when he was just 18 years old. So this guy from his childhood has trained really hard in order to come to that level where day and night he trained. He is not from a very big family, he is from a very poor family. In spite of all these odds, because of his sheer talent, he was able to prove himself, and many brands are ready to negotiate with them in order to sign that deal. So not only Reebok, even Adidas came and even Nike also came in. So eventually he signed up with Nike. So a guy who's just 18 years old signed up a multi-million dollar with such a big brand. And cut short, there is another fellow called Michael Phillips. He is also really talented like LeBron. Everybody knows he is a back-to-back Olympic medal champion where he won multiple medals. He won 28 medals in the Olympics. And both the guys are really talented, but the kind of brand endorsements LeBron got and the kind of brand endorsements Michael Phillips got is totally way different. So you can compare similar situation in India. Players like Virat Kohli, players like Dhoni, they are highly paid for any kind of brand endorsements when you compare the same with any football player or badminton player or hockey player. So why is it so? Why LeBron is highly getting paid but Michael Phillips is not so much paid compared to LeBron? It is mainly because of one single factor called TAM, total addressable market. See, the kind of sports people view matters. So with respect to NBA, where LeBron is being played, there are millions of viewers who's going to watch that sport. Compared to swimming, where Michael Phillips, even though both of them are really good, the number of viewers matters. So that is the same case with respect to cricket. Why Virat Kohli and Dhoni is highly paid? Because the number of viewers with respect to cricket is much higher than football or be it any sport in India. So this is exactly what it needs to be done with respect to investing, finding a multi-bagger stock. It doesn't matter how good a particular company is. It is all about how good that company is with respect to which segment it is being played. Whether the company's industry is having a higher TAM, higher total addressable market. Only then there is a high potential for that company to grow big. So finding a multi-bagger stock is not just about analyzing the balance sheet, analyzing the market cap of the company, analyzing the overall business prospects. It is all about finding that company which does it belongs to a big market cap category. Does it have a bigger TAM? Does it have a total addressable market which is so huge so that the company can grow big? So if you have two companies to compare, where one company belongs to a higher TAM category, higher total addressable market, and other company might not be belongs to that TAM category. But if both the companies really do well, do you think which company share price will grow much larger in the coming years? Definitely this one compared to this one, because this one is having a higher TAM value, higher total addressable market. So no matter how good this company, no matter how efficient this company is, but if the overall total addressable market is not big enough, then no matter what, this company might not really perform well in the long run. So for a company to grow really big, for a company to grow kind of a multi-bagger stock, that should be part of a bigger TAM. So how do we find these stocks? So let me explain that. So go to screener.in website and click on create new screen. We are going to find out list of stocks that has market cap of greater than 100 crores first. So this is going to give you list of all companies where market cap is greater than 100 crores. So we are omitting all the micro cap companies which is having a less than 100 crores capital. Now we are going to focus on the list of companies where it is segregated into different industries. If you check, so it will be clubbed together in different segments like finance. We know there are 200 companies that belongs to finance, and there are 151 companies that belongs to IT, and pharmaceuticals there are 140 companies. So likewise everything is clubbed together in an industry. So now we are going to export this specific information. So open the Excel sheet which you have exported from Screener, and now what we are going to do is we are just first going to sort the data based on industry and market cap. So just click on sort and enter the column value as industry, and then additionally you are going to sort it based on market cap, bigger to smallest. Done. So why we are focusing on market cap is, see, basically how do you identify a stock is having a larger TAM, larger total addressable market, is nothing but when a company is having a larger TAM, obviously it will have a bigger market capitalization because it will demand more valuation. So obviously a company like TCS will have a higher market capitalization compared to any kind of stocks like air conditioner, because the kind of addressable market with respect to air conditioner segment versus the kind of addressable market with respect to software industry is obviously much bigger. So the revenue potential is much higher with respect to IT industry versus air conditioner, right? So that is why we are going to sort it based on industry and market cap. So now we are going to find out what are the list of stocks that is having a higher TAM, and from that we are going to find out what are the list of stocks that has higher growth potential. Okay, so for an example, consider TCS, which is having a huge market capitalization, right? So these are the list of companies that belongs to this category. Okay, so now we find out how big TCS is with respect to rest of the companies. So I'm just going to divide each of the market capitalization. Yeah, so if you could see Infosys and TCS, if you compare both the market capitalization, TCS is 2.3 times bigger than Infosys. And similarly, if you do the same analysis, TCS is 3 times bigger than Infosys. So likewise, you do all the companies where you will see how much bigger the actual TCS is. So like for an example, TCS when compared to Mphasis, it is 30 times bigger, which means Mphasis is 30 times smaller. So that has a huge growth potential. So Mphasis, companies like Mphasis, Persistent. So these companies who's much smaller compared to the overall bigger fish like TCS, which is 20 to 30 times smaller. But these companies are part of bigger TAM. So there is a huge opportunity that these companies can grow really big. So if you go and check the share price of these companies, you will know. So as you could see, Persistent, which was trading just around 300 rupees a couple of years before, currently it is trading around almost 4,000 rupees. So almost it has grown 20 times over the period. How is it possible? Mainly because Persistent Systems, which provides software solution, is having a higher TAM. It is part of a TAM, it is part of an industry which is having a higher TAM, which means that whatever the solutions TCS is giving, whatever the solutions Infosys is giving, whatever the solutions HCL is giving, Persistence can also give a similar solution. So when it is part of such a bigger TAM community, there is an obvious chance that this company's revenue potential can grow bigger on the coming weeks or coming months or coming years. So overall, the revenue potential is much bigger because of a bigger TAM. Even if you consider an industry like cigarettes, where ITC is the biggest market leader having a huge market cap. Now compared to ITC, Godrej Phillips, where it is 31 times smaller than the bigger player ITC. But the kind of segment which ITC had a large, so even though ITC is a conglomerate where it not only makes money from cigarettes, it has hotels, it has no other FMCG business, but the large share of revenue has come from cigarettes business over the last couple of years. So when another player which is also part of the same industry, but that is 31 times smaller. Now if you go and check what is the overall share price appreciation of Godrej Phillips, you will understand its impact. So as you could clearly see, there is a very good share price appreciation, where from just 400 levels it almost moved to 3500 levels. So being a part of similar industry, where as you could see tobacco revenue breakup is almost 90% for this. By participating in the same segment wherein a company is having a higher TAM, the growth potential is so huge, which is clearly visible in the share price. So this breakdown of Excel analysis is going to give you a clear-cut, detailed industry-wise market cap. So from that you can cut short what are the list of stocks that is having, or what are the list of industry that is having a huge market cap, and from that industry find out what are the list of stocks that belongs to the higher TAM, that belongs to the higher market cap category. From that, you do the due diligence, you do all the fundamental analysis, all the balance sheet analysis, do all the business analysis which you want. So instead of directly trying to find the list of stocks from 5,000, 6,000, huge list, all you can do is find out the list of companies that belongs to a bigger market cap segment. From that, find out which company is relatively smaller compared to the market leader. A company which is 20 times smaller will obviously have a higher potential to grow much bigger. And from that, find out what are the stocks that are fundamentally really good, which is having good management principles, which is having a good corporate governance, and then try to invest in that stock. Invest in it, wait patiently for a couple of years, obviously you will see a good result. So this is just like how you can segregate between LeBron and Michael Phillips, segregate between a cricket player and a football player. So it is all about a company which is part of a bigger TAM, which is part of a bigger market cap segment. Then finding a company which is having a really good growth potential, but if it is not a part of bigger TAM, then obviously the bigger growth is not possible. So try to apply this logic when you're trying to find a multi-bagger stock. That is definitely going to help you out. So I hope you found this video really helpful. I'll see you guys next week with another video.